Everybody, I think we'll go ahead and get started here. And thanks for joining the call. All lines are muted as usual, and you can engage Josh Campbell here on the chat line for questions you might have. We can answer for you after we go through this data. All right, we have a pretty active week, a short week, so it's condensed here into a few days. And as you already saw this morning, we had some pretty positive housing data, and we go on. We had a very positive two-year note auction as well this afternoon, and so all looks good on the pricing front. In fact, as we sent out an alert about an hour ago, markets are improved by actually a little bit over an eighth at this point, and so you should have had some pricing improvement this afternoon. We alerted that. Oh gosh, it's almost been 2 hours ago now. So let's take a look at what we have going on this week. Starting tomorrow at 8:30 Eastern Time, we have a revision to that GDP data that came out a few weeks ago. And if you'll recall that Q3 GDP came in at 3.5%, and it's expected that the revision will bring that down to 2.9%. And so to the extent we're outside of that, if we get a revision that's lower, that would be bond friendly. If we get a revision that's higher than that, it would not be bond or mortgage pricing friendly. And so that'll come out pre-market tomorrow, so stay tuned. It's a high impact data point, and one of the bigger ones, in fact. So you'll definitely want to stay close to our alerts for that one. And at 9 Eastern, to follow that, we'll have the K-Show Home Price Index report. It isn't typically much of a market mover, unless this thing would fall way outside some expected number. But again, it's a 2-month leg on data for 20 major metro markets, and again, expected to show that home price depreciation has been slowing. And so we'll, again, it shouldn't be a big market move, but stay tuned. It will be relevant for our business, of course. And then at 10 o'clock Eastern, we'll have a consumer confidence report. And that is not the same as the University of Michigan Consumer Center report that you'll see 2 times a month. This one's a little different. And this one measures whether consumers are willing to spend and are expected to do so. And this is actually expected to be even to the last time this report came out. And so it should be fairly market neutral. However, it is consumer related. As you know, if you've been on our calls before, anything consumer related can be a market mover. So consumers show that they are much more willing to spend and their confidence is up. That, of course, would be negative for mortgage pricing. And if it's the other way, if consumers are have less confidence and are less willing to spend, that would be positive and supportive for mortgage pricing. All right, then at 1 o'clock that day, we'll also have the 5-year note auction. And again, the longer you go out on the maturity, the more important these become. And I guess the best way to put it would be the closer we get to that 10-year note, the more important these become. And so this morning's was rated moderate impact. Tomorrow's 5 years also moderate impact. You'll know that on Wednesday, the 7-year note was rated as high impact as it gets much closer to that 10-year term. The 5 years also expected to go well. It should be noted that on the 2-year auction this morning, it went very well. There was plenty of demand. The only hitch in that one was that the yield to be paid was a little higher, and that could portend for higher yields perhaps on the 5 and 7. We'll have to keep an eye on that. All right, then we move into Wednesday. Wednesday at 7 o'clock right in the morning, very low impact data point, but always important for our business, is the MBA mortgage applications report. As you noticed last week that we reported, purchase apps are, last week we're at a 12-year low. And so it'll be interesting to see how that data comes out. Of course, we're getting some seasonality in that number. But that comes out at 7, not much of a market mover. However, at 8:30 Eastern Time, we get a whole slew of data, and those are market movers. And so you'll want to be definitely stay tuned to our pre-market and alerts on Wednesday morning. We'll go through these. We've got a durable good orders report. That's actually manufacturing strength related, and so that one can be typically of moderate impact unless it would be way outside the number. However, it is pretty volatile, so we'll want to keep an eye on that one. And then we get into more consumer related things. We get the personal income and personal spending. And so this will measure whether the consumer has the ability to spend. Also takes a look at their current spending habits. Income is expected to be up 0.2%, and spending expected to be up 0.5%. High impact numbers, and the extent that income or spending are above those numbers, of course, that would be positive for the economy, negative for bonds and mortgage pricing. or conversely, if income or spending are below those numbers, that would be negative for the economy and positive for bonds and mortgage pricing. Then we'll get the weekly jobless claims number. It is anticipated that we will break under that 500K number potentially this week even. But again, everybody's looking for that number to kind of get down to 425 before there's belief that employment has turned and we'll start adding jobs to the system. So keep an eye on that. That is a high impact number. 9:55 Eastern Time, then we get the twice a month. As you know, we get the University of Michigan Consumer Sentiment Report. Usually a market mover. Last time this was reported 2 weeks ago, came in a little light. And if you recall, this is a report that comes out twice a month. It's conducted off of 500 interviews over the phone and just really measures consumer attitude at that moment. And a little bit of a volatile number, and it's expected to come in about even where it was last month. Then we get at 10, we get some new home sales reports. Matter of impact, as you see, to the broader stock market, anything related to housing can move the stock market, and then of course can bring bonds with it. But traditionally, this would not be a bond market mover. But the extent it's much bigger or less than expected and moves stocks. The stocks in the equity market are looking for recovery in housing for their clear sign go forward. That can be a bond mover. Then at 1 o'clock, we'll get the 7-year note auction. This will be important because this is the closest you get to 10 here note. And the 10-year note went well a few weeks ago. So it's expected that the 7-year note will go as well. But again, high impact. You'll want to be close to us on that one. And then at 2 o'clock, the FOMC minutes are released from their November 4th meeting. Definitely a high impact. Typically, what starts to happen is everyone starts to, all the analysts start to look over every word and data point mentioned, looking for signs that there's a change or dissension in sentiment among the Fed. And so you want to keep an eye on that. That can definitely be a market mover both for stocks and bonds. And then that's it. We packed in basically a week's worth of data, a heavy week's worth of data, into frankly 2 days, as today was relatively light outside that home sales data point. So Thursday markets are closed. Friday markets will be open about a half a day for bonds, and then we'll move on to next week, but no data on Friday. So really, Tuesday and Wednesday are the big days that you want to stay close to. Could cause some choppiness in the market. So that is the week ahead. As you know, last week we kind of got the clear signal again from the Fed as Ben Bernanke spoke, as we mentioned. It looks as if now the Fed futures are pointing towards no increase in rates all the way through 2010. However, we've read some articles recently of some outliers that are out there as far as even 2012 before the Fed actually starts raising rates. Now, there are other things they can do to squeeze liquidity out of the system, but that is definitely supportive in the meantime of bonds and mortgage pricing. Okay, well, that's the week ahead. Josh has any questions, we'll go ahead and flag those. And it looks as if the queue is empty. So we'll go ahead and wrap it up. Again, for those of you that are not already subscribers to the Mortgage Market Rate Advisory and alerts, take a look at that. Josh has on the screen there the domain. It's our homepage, and you'll find a tab called Rate Alert Service. You'll definitely want to subscribe to keep up with these market gyrations throughout the day. And those of you who are subscribed know that we keep you posted and find that to be very important to manage your pipeline and your business. And then again, and finally, any of you that are not already accredited with us as an accredited mortgage advocate, you want to take a look at that program. There's a tab, actually the domain's right here, nationalloanadvocates.com lender help, or if you're on our website, there's a tab called I'm a Lender. Take a look at that, and those of you that are accredited could attest to how well that's helped you set consumer confidence at ease and referral partner confidence at ease in working with a consumer-friendly lender, along with all of the tools that you get, which include the rate advisory and alert service. All right, well, thanks for joining the call today, and have a great week. Happy Thanksgiving, and don't hesitate to reach out to us if you have any questions about the market throughout the week. Thank you very much.